Hi, David Bassanese here, Chief Economist at BetaShares, and I just wanted to give you an update on the current economic situation and state of play with regard to financial markets in light of recent share market volatility and, of course, the Reserve Bank's policy meeting for August. Now, the good news out of that meeting, at least if you're a mortgage holder, is that the Reserve Bank did leave interest rates on hold. The cash rate at 4.35%. That comes after some speculation, in recent weeks that they may have in fact increased rates. But the June quarter consumer price index numbers that we did get last week were, I think, good enough to keep the RBA on hold. They weren't great. And in fact, the RBA continues to express concern about inflation. It does worry about the upside risk to inflation. It's certainly not of a mind to cut interest rates anytime soon. And if anything, in the near term, there's still a tightening bias. I mean, they could still raise rates if we don't get the declines in inflation over the next few quarters that the RBA is currently forecasting. And that is even if the US Federal Reserve does cut interest rates. So quite a different situation in Australia compared to the US at the moment. Now, of course, what about financial market volatility? Will that cause the RBA to potentially change its mind, potentially cut interest rates more quickly? There's a risk of that. My sense, though, is that the volatility that we have seen in recent days I think is an overreaction to a weak employment report in the United States. People are talking about recession in the US, but to my mind, the fundamentals of the US economy are pretty sound. It doesn't look to me as if we are going to get a recession anytime soon. So I think those concerns will die down. I do expect that degree of volatility to subside and concerns about the US economy to subside as well. So ultimately, in terms of the RBA, we're left with the inflation outlook. That's still going to be the key driver of what the RBA does do over the next 3 to 6 months. My base case at the moment is that the economy will continue to remain soft, but not soft enough to force the RBA into cutting rates quickly. Inflation will come down, and certainly by early next year, I think underlying inflation will be around about 3.5% from just under 4% today, or near 4%. And as a result, there'll be, I think, a reasonable case for the RBA to cut rates maybe by the February meeting of 2025. And that will be after the US central bank has probably cut rates at least 2, possibly 3 times by then. That's it for now. I should point out I am doing a quarterly economic webinar, our regular quarterly economic webinar on Friday. So if you want to get more details on the economy, more analysis from me, please go to our website, sign up for that webinar, and I'd love to have you along and join us for that presentation. That's it from me now. Thanks for watching, and I'll see you again soon.